Mentioned we're seeing shares of XPeng lower in New York afternoon trade, but shares are well off session weakness. Earlier in the session at the open, we saw shares of XPeng tumble by as much as 16%, and this does come as the EV maker based in China reported earnings that missed expectations first quarter.
But I really want to, make this point that Nvidia stock is actually cheaper today than it was yesterday. Earnings estimates went up by 72%, and the stock is up a lot, but it's only up 25%. So on a forward multiple basis, Nvidia is actually cheaper today than it was yesterday.
It's the end of the week, and I'd be remiss if I didn't talk about Nvidia and their meteoric rise off of their earnings. But first, we're going to talk about another company that had earnings, the Chinese automaker XPeng, and how it may have dragged a little bit across all the EV players, including Tesla. And then we're going to compare how Nvidia shocked the street, surprising both analysts and investors with their magnificent beat on their earnings, and how Tesla can similarly benefit from a gambit that they've been utilizing for over 5 years now. So without further ado, let's get right to it.
EV shares under pressure today, driven lower by Chinese company XPeng. Yahoo Finance contributor Remy Blair is on the floor at the New York Stock Exchange with the details. Remy.
Well, as you mentioned, we're seeing shares of XPeng lower in New York afternoon trade, but shares are well off session weakness. Earlier in the session at the open, we saw shares of XPeng tumble by as much as 16%, and this does come as the EV maker based in China reported earnings that missed expectations. First quarter sales were off by a whopping 46% year over year, with the company losing precious pennies for each vehicle that it sold. Also, losses were increased by 38% year over year for the company's bottom line. Now, its demand outlook also weighed on shares of the automaker, projecting a year-over-year decline in second quarter deliveries as well as revenues. The company says that second quarter deliveries could fall by as much as 39% year on year. And as you mentioned, we did see shares of other EV makers tumble today, but some have been reversing earlier weakness. Tesla shares are lower, snapping a recent winning streak of 5 days, while Shanghai China-based NIO fell to 3-week lows. Earlier in this session, we saw Beijing-based Li Auto open lower, but now they have turned slightly higher in New York afternoon trade. While for XPeng, we are expected to see deliveries of its G6 SUV at the end of this quarter, and its models are expected to come off the production line this week. Now, only time will tell whether sales of the new SUV affect XPeng in the second half of this year.
All right, Remy Blair, thanks so much.
It goes without saying that if an EV automaker is struggling this much, then there may be correlation throughout the entire industry. Nvidia has an incredible day. All the players in that industry, regardless of Nvidia's moat, gets a rise, right? A rising tide lifts all boats. Well, the same can be said once the air is sucked out of a company and they're missing sales by 50%, you'd imagine that everybody thinks that because they're not selling, nobody's selling. And that's a knee-jerk reaction. So Tesla's stock price, the high for this week has been over the 190s. But now we're kind of sitting hovering at the mid 180s. But I imagine XPeng earning miss is mainly the result of that. As Tesla nears its second quarter earnings, news starts to trickle from various sources that their sales are indeed not impacted, such as XPeng's. That trend will reverse and Tesla will obviously trend higher, much like Nvidia did when they released their earnings and they blew it out the water. For more on that, let's go ahead and take a look.
Bank of America analyst Vivek Arya joins us now. He maintains a buy rating, raises his price target, as they all are this morning, from 340 to 450. Why was this such a surprise, Vivek, to you and the rest of the street?
Sure, Sarah, a few things. We'll talk about the fundamentals, but I really want to, make this point that Nvidia stock is actually cheaper today than it was yesterday. Earnings estimates went up by 72%, and the stock is up a lot, but it's only up 25%. So on a forward multiple basis, Nvidia is actually cheaper today than it was yesterday. Now, as to what's driving this, right, to come to your question, I think first we are at the start of this really large market in generative AI, large language models. About $1 trillion of data center infrastructure needs to be transformed. It has to be converted to this new technology, number one. Number two, to be successful in this technology, you really need that end-to-end full stack computing. So you cannot just be a chip company, you cannot just be a software company, you have to be all of the above. And I think that's what Nvidia has shown, which is why they can monetize that trend in 15 to 20 times what a typical semiconductor company can. And then the final point I would make is focus, that this platform, which is called the GPU, is the one thing they do, not 20 things, just one thing they do, which is why there is a tremendous amount of leverage. You mentioned earlier in the program that there are a number of companies in the $1 trillion market cap club. Their average free cash flow as a percentage of sales is 19%. Nvidia is 35%. So it's not just driving sales growth. I think this power of focus is also coming through to the bottom line in terms of very, very strong free cash flow generation.
When I'm listening to how analysts are reacting to this incredible feat that Nvidia did for their earnings, and then the response by the market, it's amazing. They earned an extra $4 billion that was unanticipated. And the fact that that wasn't even leaked, right? That's just something that bombarded people right at the closing bell on Wednesday. Freaking amazing that they were able to keep that under wraps for that long. You see it immediately as those numbers are released, and EPS is just thrown out of the window, and you have to recalculate where this company should be all of a sudden. And that's because they had this extra $4 billion that materialized from seemingly out of nowhere. Is Tesla doing anything that has to do with artificial intelligence? And that once they reveal all of the revenue that they're acquiring from said technology, is it possible that Tesla could beat earnings by a significant amount to this degree or more? What would that do for the stock? There's hundreds of thousands of vehicles on the road right now with full self-driving beta engaged. Some of them bought the car with full self-driving, and others, like myself, have chosen the subscription model, $200 a month. That revenue is currently being deferred until certain milestones are being actualized. So while Nvidia, in the course of a quarter, they actualized all their profits based on surge of the need for their products within those 3 months, Tesla has been building this potential revenue stream by deferring it and to release it at a later date all at one time. They're just going to be like, oh, and remember that revenue we've acquired over the past 4 or 5 years? We're going to put that all here on Q whatever. And I don't think it'll be Q2. I don't think it'll be Q3. I'm saying sometime within the year, the adoption rate for full self-driving is going to be so strong that they won't have any other choice but to unveil that revenue stream. And you think Nvidia beating their earnings was news? Holy smokes, the multiple for Tesla will take off like a SpaceX rocket in this month. Understand, Tesla is just getting started. A lot of this is in early innings, and Tesla is one of the major players when it comes to artificial intelligence, and they know it. Once they have enough data, then they're able to transfer that same software into their humanoid robot. The numbers will get nutty, folks. The numbers will get really, really nutty. And just for some context, I've got this news article. Nvidia stock surge is a warning to Tesla and vice versa. Well, that was a surprise. Nvidia blew away current quarter sales guidance off the strength of its artificial intelligence related business. The stock is on pace for a truly epic gain. For Tesla, there is a risk hidden inside the Nvidia stock price reaction, as well as an opportunity. Nvidia stock is almost up 25% in early trading at just under $380 a share, adding roughly $189 billion in stock market value. The stock has a chance to finish with the biggest one-day gain in market value in history, according to Dow Jones market data, surpassing Amazon.com stock $191 billion gain on February 4th, 2022, and putting it on pace for a market capitalization of more than $900 billion. Whether or not the gain makes sense, AI is the next big thing. New Street research analyst Pierre Ferragu wrote Thursday, Nvidia sales could hit $100 billion in 2027, up from an expected $43 billion in 2023. He rates it at a buy and has a $430 price target for shares. It wasn't long ago that Tesla's electric vehicles were the next big thing. I guess that assumes that Tesla's vehicles still aren't the next big thing. And I guess they're not thinking that Tesla is an artificial intelligence company as well. Yeah, let this slide. And the shares gain of more than 740% in 2020 after the company became consistently profitable and unit sales growth accelerated proved it. Tesla stock has gained 1.1% on Thursday, but shares are down 22% over the past 12 months and off about 40% from their August 52-week high. More EV competition, rising interest rates, and falling car prices leading to weaker profit margins are pressuring investor sentiment. 1. EV competition, joke. Rising interest rates. Turning out that people are still buying houses and still buying cars despite interest rates being at all-time highs. And falling car prices. The car prices are falling, but that is part of Tesla's master plan and they are expected to fall. So if that's pressuring investor sentiment, then so be it. I will continue buying the stock. Still, retail investors love Tesla stock. More than 50% of shares are held by small investors based on insider holdings and filings from institutional shareholders. That's a lot of shares from small investors. Nvidia shares are also popular with retail investors, but investors spent the past week buying Tesla stock and selling Nvidia, according to JP Morgan data. The risk is that a newer, shinier toy leads to some selling of Tesla stock and rotation into Nvidia. I would say a large bit of that occurred on Thursday, but it is what it is. If you think the Nvidia moment was big, long term, Tesla has the potential to dwarf that on many fronts. Just off the top of my head, you have the explosion of the energy business. If revenues keep on that pace, you're going to see Tesla stock explode. 2. FSD Beta has been accruing revenue for over 5 years now, and occasionally they'll take some of that deferred revenue and put it into the financials. But largely, that's a huge nest egg that's been accruing for almost half a decade now. If they choose to unleash all of that deferred revenue in one quarter, the chart for Tesla will soar past the moon to Mars. If you look at the FSD take rate, and the financials are a bit cloak and dagger, there has been some deferred revenue realized with full self-driving, but the amount is minuscule. When they're able to unveil all the revenue generated from full self-driving, and Elon kind of tweeted out, before they do the free monthly trial, the stack not only needs to be end-to-end AI, video in, video out, but he wants it quote unquote smooth. That's an indicator. I have a feeling when it's smooth, you're going to see the deferred revenue unleash itself onto the next quarterly earnings statement. Could happen prior. There's a little mystery to when all that deferred revenue will be actualized. And when it does, what we call the Nvidia moment for artificial intelligence will then be redubbed as a Tesla moment. And I don't think the likes of it will be seen again. There is some good news for Tesla investors though. It has its own AI business, but instead of producing natural language text, Tesla's AI teams are teaching cars to drive themselves. Tesla has tremendous capability in real-world AI. Techno king Elon Musk told CNBC's David Faber after the company's May annual meeting of shareholders. Tesla will have a ChatGPT moment, recently dubbed the Nvidia moment. Suddenly 3 million cars will be able to drive themselves with no one. The self-driving opportunity, which Tesla calls full self-driving, is not reflected in the stock, according to Wedbush analyst Dan Ives. The street is not valuing the AI piece of Tesla, and ultimately they are a clear leader down the road on FSD and Optimus, he writes. Over time, this could add $40 per share to the Tesla story. I have a feeling that's going to be grossly understated if what we've seen with Nvidia happens with Tesla, and you look at the immediate impact of that deferred revenue for full self-driving. It's going to be double that, maybe even triple. He rates Tesla shares a buy and has a $215 price target for the stock. FSD is a free call option, says Future Fund Active ETF co-founder Gary Black. referring to the investor term for something that isn't included in most valuations, but can only benefit a stock if things break favorably. I love this analogy. FSD is the ultimate of call options simply because it will not only unlock the robo-taxi fleet, but the Optimus implications as well. The opportunity is grand. It's a free call option if you're involved in the stock, because if you're just looking at Tesla as a car company, which you shouldn't be, that business is still booming. So if you're owning that simply because of the automobile side, you also have the energy, which isn't really being calculated in my opinion. Then you have the robo-taxi fleet, which nobody gives them credit for. And then you have Optimus, which is a pipe dream. That is some Isaac Asimov type situation that nobody can really comprehend, especially the street. I don't build robo-taxi valuation into my $320 price target. Good on you, Mr. Black. But if Tesla's FSD suddenly gets a 0 interventions per trip, it could produce an Nvidia moment. Gary's on it. There is no doubt in my mind that we're on the same page in this matter. Because it's not a matter of if, it's only a matter of when. If you've tried the full self-driving technology, you understand how revolutionary it is. If you haven't tried ChatGPT and understand the implications, how it could impact your daily life, you probably should do that too. And then once you do that, take a demo in a full self-driving Tesla, and then I want you to see if your reactions are similar, if not greater than when you experienced ChatGPT. It blew my mind. If you haven't experienced full self-driving, there's no way you can understand why I'm so bullish on the technology and that it's just around the corner. The Nvidia moment, which will soon be dubbed the Tesla moment, is just around the corner, because once they're able to give out 3 months of full self-driving, the deferred revenue will either already have happened and been applied to Tesla's financials, or it will be soon to come if it had not been applied yet. That's the key point. When FSD is smooth, that's when the Nvidia moment will occur. And that's all I got. Be easy. Peace.